So now you can see how much running room America has. We talk all about the world, the opportunities here. We were amazed to see that. And before you know it, it may look like it's frontier, but places like Guyana, many parts of Brazil, Argentina, they'll be producing before you know it. The pace, the rapid pace we are developing is unbelievable. There's certainly access to acreage and the type of players you've seen around. We are from, in this part of the world, from small players to large players. Let's talk about the state of the industry here. If you think about it, there are places which are matured with deep water infrastructure. Fiscal terms, Julie will talk a little bit about it to give you an appreciation of how it compares to the world, which is very attractive. People, as far as the campus allocation is concerned, it's growing, and it looks encouraging. We don't mind if you want to invest more. That's why we have you here. Regulatory capability and capacity exist, and there's a lot of people move with a good pace, and there's a robust supply chain and technology. So that's what you look for when you look for in Americas. Having said that, it means a lot. There is the good, the bad, and the ugly. So what's the good? The good part is there are a lot of deepwater basins with varying maturity, allowing a portfolio approach. You have world-leading innovation and technology in this region. A lot of human talent. Look at yourself, left and right. You got it. It certainly have some mature basins, but this thing is over. Calm is still not over. We're getting Mexico, and we're moving on and on. And they are well-established national oil companies. Talos represents one of them here. And wide variety of players, starting from, if you look at Tim as a wildcatter. And I've taken a page from Tim's book. He says you work in the same time zone if you're in Americas. He works 24 hours, but he calls it the same time zone. I think what he means is you dream the same dream when you sleep, and you wake up and you're together. So there are some advantages. That is the good. That is the good of this place. The bad, I won't call it the bad, it's just a movie. I will call it not so good in Texas. Of course, there are NOCs, and they go back and forth. But there's a learning curve. We have seen Brazil and Mexico again come back and open up. But at times they do have mood swings. We all do. We are humans. There's a little bit of local content pressures you see around, but not very demanding. There are regulatory processes. There's concerns about environment. We all get hung up once in a while, but we got a best track record of safety or environment in Americas. And in few areas, there's a little bit of inflexibility of the fiscal regime. Of course, there's no protection to downside. But that's where we show our smartness and come up with various ways. All right, you've worried what's ugly now, right? Nothing gets as ugly as this one. We are challenged every day or threatened by fluctuating commodity prices. That's the ugly part of the business. This is an open market in Americas, we know it. And that's where the resilience of this business, the way we do business, and the way we sustain ourselves is important. As they say, if you are to the point and you stick to your guns, the good will finally win. Oh, I'm not promoting the movie, but it does happen that way. Good certainly wins here. With that, I've given you some perspective and a deeper dive. I'll ask Julie to come and give a deeper dive for all of you.
Oh, Sandeep, you're going overboard with all the movie and song references. Yeah, I spotted another Neil Diamond lyric in there as well. Don't know if you all did, but I was raised on Neil Diamond, so. All right, so this morning, all I wanted to do was share a few observations with you before we get on to the folks who have the real opinions on the Americas, who have the real experience, that I'm looking forward to hearing from them their stories about how they have built businesses across the continent. But first I wanted to share with you, and Sandeep might have to teach me how to, there we go. I wanted to share with you a few observations about how much opportunity there is across the region for growth in the deep water. So this map, I started throwing on here some logos, some symbols for what kinds of activity is going on, what kinds of growth opportunities there are. It ended up being extremely busy. So we have upcoming licensing, which includes regular rounds in the likes of the U.S. Gulf of Mexico and Canada, where they're regularly arranged, and you know when they're coming up every couple of years. And then we have, of course, Brazil with its continuing with its flurry of licensing opportunities, both for discovered resource opportunities and for exploration acreage. And then we've got a couple coming up in the Caribbean as well. Cuba, Trinidad and Tobago, and so on. Of course, once you've had your licensing, and I'm not showing on here the licensing that's happened in the last couple of years, and of course, Argentina is the most recent example of a licensing round that we've just seen the results come out. Once you've had that phase of the exploration sector, then you move on to seismic and then drilling. So we will see some seismic activity. I just didn't have space to show it all on here. High impact drilling, though, we're expecting over the next couple of years across the margin and in Brazil, across the Atlantic margin, up into Suriname and Guyana, which of course is going to be the subject of other sessions here in the OTC. And then through into Colombia, Deepwater Colombia, which of course Carlos will talk a bit more about what's going on there. And then through into Mexico, again we've heard, so the sessions in OTC, what's happening there, and of course the US Gulf of Mexico, which continues to surprise us with new plays every year. And up, of course, into Newfoundland. I don't want to forget my Canadian colleagues over here who are in the audience as well. So we're seeing high-impact drilling happening across the eastern margin. And you'll see Peru. We're hoping to see a deepwater well, the first deepwater well drilled in Peru, perhaps next year. Now, of course, aside from high-impact exploration drilling, as I mentioned, we've got the discovered resource opportunities, giant fields that have already been discovered, opportunities to get into those along with Petrobras. We're expecting several final investment decisions on big projects over the next couple of years. And I was looking this morning at our project tracker, and this year we're expecting 30 large projects in deep water, so 17 in Brazil, 9 in the US Gulf of Mexico, and 4 scattered across other regions such as Guyana. Of course, we've already seen one sanctioned in Guyana this year. So lots of activity coming up, and of course, once you have FID, you've got lots of development activity, capital expenditure, and then production will follow that. And then we've got M&A opportunities, which goes from farming into exploration wells and blocks, all the way through to M&A opportunities of maturing fields. We've seen quite a lot of that activity already in the US Gulf of Mexico. All right, so going back to licensing rounds, I wanted to share with you some work that we did last year and updated early this year after the Gulf of Mexico, the latest lease sale. Just looking at how much in those 3 countries where we've seen, signature bonus is a very big part of the bidding process in those countries. We've seen a lot of money laid down. So just thinking about Mexico first, after the historic energy reform in 2013, we had a number of licensing rounds, 2014 to 17. Signature bonus was just one element of that whole bidding process. And we saw a lot of different types of companies bidding for blocks in Mexico. And this was just looking at the shelf and deep water. So this is all of offshore, okay? So you have lots of small and private companies, as well as mid-caps, large caps, and NOCs. And you'll see in the US, which of course is often touted as playground for all types of companies. We have actually less diversity now after changes in the Gulf of Mexico over the last few years. So Mexico really benefits from having a wide range of exploration types and opportunities, which has attracted a lot of different types of companies. Brazil, on the other hand, tends to be the playground of those with deep pockets. So the majors and the NOCs, not only Petrobras, have played a very large part in in those bidding rounds and account for much of the almost $8 billion in signature bonuses. And of course, those are world-class opportunities, very, very large resource sizes, require a lot of capital to develop, and this is the reason why it's mostly the bigger companies that are bidding there. Now, these are not the only countries, of course, that have held licensing rounds or have offered blocks to be bid. So other countries, like Suriname, have continued to license up blocks with their open door approach. So there are differences in approaches. It's not always just open licensing rounds. There are other ways to bid. You might be looking at work commitments, and fiscal terms are becoming more and more a biddable item. And on the fiscal terms, I wanted to talk a little bit about fiscal terms. And there are many, many different ways to measure the fiscal terms that a country's offering and how attractive they are to operators. So this was just one plot that we took from some of our tools that is highlighting the share that the contractor, so the operator and its partners, and my pointer is pointing on my screen, but not on your screen. So the vertical axis there is how much the contractor gets a share of the pre-take MPV. And we've put this against deepwater prospectivity. Now, the idea here is that the fiscal terms that a country offers should reflect the level of risk that a contractor is taking on in that country. So most of that risk is held in how prospective the rocks are. So different areas of risk, of course, but we see a good correlation, or that there should be a good correlation between the prospectivity in a country and the fiscal terms it's offering. So in general, what you would expect to see is fiscal terms in areas where prospectivity is unproven as yet, up in the top left. So explorers are taking on more geologic risk, and so they would expect, in return for that high risk, they would expect to get a higher share of the PV. And then as a country is proves up its prospectivity, you're de-risking. Of course, there might be other elements of risk that you have to take account of, but you would then move your fiscal terms potentially towards the lower end of this axis. So you tend to see a trend from the top left to the bottom right. And of course, we're showing on here a scatter plot of a few North American and Latin American countries, plus select fiscal regimes from around the rest of the world. And you will see there's a lot of variation there. So even where there's not much prospectivity in some places, the contractors don't get an awful lot of the overall share. So it really does vary, and there's a lot of different ways to structure the fiscal terms. I'm sure we'll hear more about that as we go through the morning. So I hope that has given you a very quick overview of some of the themes that we touched upon in our paper. This chart is in there in the paper with a lot more discussion about fiscal terms and different ways to structure them. So please take a look and read that. And I want to introduce Erik Oswald and pass it over to him to talk more about how to attract, how do countries attract new entrants? And of course, fiscal regime is a big part of that, but many other elements to it. So please give me a hand in welcoming Erik to the podium.
Good morning, everybody. As Sandeep mentioned, I'm a geologist. I have a couple surprises for you. The first is I'm only going to show one slide. Geologists don't very often do that. Maybe not even one slide. Okay. And it doesn't have a map on it. You know, I think this might be the first time in my career I've done a presentation that doesn't have a map on it. It doesn't happen very often, does it? Okay, so we've talked about some of these ideas. I want to leave you with a thought. We, as geologists, would all agree that rocks and fluids are essential to the prize, to the thing that we're chasing out there, you know, to the goal of the explorationists. But I'm going to posit that that's actually not the first thing. The first thing we have to think about are the prerequisites to going out and figuring out whether we have the rocks and fluids that are out there. And in my mind, this chart does a nice job of summarizing what those prerequisites are. There's sort of three ideas you have to kind of keep in mind. One is the fiscal terms that Julie has just taken us through. Access is a huge one, and then the regulatory framework. And without having those pieces in the right places, it's pretty hard to get people to go invest money to go see if we've got the right rocks and fiscals out there. So I want to kind of leave you with that single concept that this stuff is really important, and if we look at the history of this great region, the Americas, that's had all this success, I think that you can tell that history largely through these variables moving around. And consequently, if you look into the future, and we all look into the future on where we see the exploration business going, these are the variables that you want to be paying attention to see what that future looks like for the country. So let me just kind of briefly talk about these three elements. So the first one I'll talk about is access, because that's kind of a thorny one that always bothers me, especially in our country here in the United States. Do you guys know how much of the U.S. offshore is available for investment for us to go out there? About 6%. 94% of our nation's resources offshore, off the continental shelf, are not available for us to invest in. So who's losing there? I mean, the citizens of the country, right? I mean, it's a huge amount of potential wealth that we're not even beginning the conversation about. So there's a lot of reasons for that. There's a lot of mechanics in how that happens, but that's an astonishing number for a country that's demonstrated, has an incredible track record in the Gulf of Mexico, knows how to work the industry, knows how to do things safely and environmentally responsibly. So that's something to think about. It's unfortunately not just in the United States. There's many parts of the world where access is a major issue, many parts of the region. And interestingly, it's often smaller groups of people imposing their view on the citizens of those countries. So it's not like something we vote on or get a general view of. Lately, the citizens of French Guiana were told by their host government in Paris that their offshore was out of bounds. And so any potential wealth that was lying off there for them to develop wasn't going to happen. So this is I think, an increasing and growing threat to the industry, and something that when we look at the future of the Americas, we'll have to pay close attention to. There's certainly many parts of our country that people would put capital in to explore, very prospective eastern GOM areas that I think many of us would invest in, and then of course the entire eastern part of the United States coastline is prospective, and we would be out there trying to shoot seismic and investigate to see what are the resources that are available. And then once you know that, then you can have a conversation about, is it worth it to the citizens of the country to make those investments and develop those resources. So that's access. Maybe the most striking example I'll give you on access is Brazil, because it has a very fascinating history with regards to access. And ANP, Decio Adone of the ANP, I think was here at OTC last year or the year before and made a comment about how in this decade where they decided to take the pre-salt out of play for most international investors, the president decided that they were going to have this polygon and that only Petrobras would be able to work in that polygon, and all the other investors would be held back. So they've called this thing the greatest opportunity lost in a generation. And the ANP, this is the Brazilian regulator, estimated that $350 billion had been deferred from the Brazilian economy by that simple political move. So these have astonishing effects on the citizens of the countries who are the owners of these resources. And fortunately, Brazil has changed, and now, as many of you know, is a big investment area. In fact, my pockets are a lot lighter because of it, investments in the past. So that's access. Julie talked about fiscal terms, and I think did a nice job of kind of painting a summary of that. I'll just add that this idea of fair and equitable fiscal terms is central to that. These are long-term relationships. You can kind of think of them as marriages. You know, when an investor goes into a country, it's 30 years. It's a long-term relationship, and so it needs to be beneficial to both parties to keep everybody in that relationship. It is not healthy for the country to have people come and go. Work doesn't happen when people come and go. When people get acreage and then leave the acreage, that's lost revenue for the country. So you need to have a system that, a framework that allows both people to stay engaged and investing and looking out towards the long-term benefit of the resource and hence the resource holder. That's a very, very important idea. The concept of fair, the way I like to think about fair is what will rapidly and responsibly explore and develop the resources of a country. Okay, so it's in their best interests to know what they have and then to have that developed responsibly and rapidly. Time is money, even to a government. You know, we all pay attention to PV as business people. Government should pay attention to it too, because when you start messing with the time value of money, you're really stealing money out of the pockets of the owners, the citizens of those countries. So that's a big topic. Okay, and then finally, Julie mentioned Argentina. Argentina was a great example of appropriate fiscal terms. There was a lot of risk out there in that tender round, both subsurface and, quite honestly, above ground, too. Argentina has not always sent clear signals to investors that that's a safe place for them to invest money, and so the terms needed to compensate for that. And I think they did a nice job. They got several companies, many companies investing in their offshore to explore to see what they have there, including ours. Finally, I'll make a comment about Guyana because Guyana, there's a lot of discussion about fiscal terms in Guyana. Guyana was a very risky investment when we signed the PSC in 1999. The government was new. It had a history of nationalizing resources. There had been 40 or 50 wells drilled in the offshore, no discoveries. And there was no sign of a structure anywhere out there. So that was a very, very risky place to go invest money. And accordingly, the contract was profitable if you did find something. And there's been many people that have looked at that and shared that same opinion. Okay, now I'll turn to regulatory framework. There's a bunch of issues in here. There are many problems in regulatory frameworks that stymie investment. And that's a whole session in itself to kind of cover that. But I'll just kind of mention that the primary effect is if you put regulation in place that slows, of course you want responsible investment, but if you're slowing investment and slowing activity and not improving the environmental impact of that activity, then you're taking money away from the resource owner. It has a big effect. Like I think Woodmack's done calculations where you look at the PV effects on projects, let's say in Newfoundland, and if you delay a project a year, that's 7% of the value disappearing out of that project. If you delay it 4 years, it's 25% of the project. We have many examples where regulatory action has delayed more than 4 years in investment. So we need to start thinking about this in terms of that's money that the government is losing. That's money that the citizens are losing. And so the responsibility of the regulator is to get their job done, get effective regulation done, but not at the expense of PV, of wealth to the country. Okay. Finally, I'll talk about U.S. Gulf of Mexico. It kind of hits some interesting points on all these fronts. Access we talked about, a little bit limited in the eastern GOM. Access also includes having the appropriate sized acreage for the activity that you're undertaking. So many of the companies now are very successfully exploring around existing discoveries, and the smaller block sizes that are in the Gulf of Mexico are somewhat appropriate for that type of exploration. But if you're looking for a new play, if you're really trying to do a game changer new play, you're going to be taking a lot more risk, spending a lot more money on probably more expensive wells. And so the reward needs to be commensurate, which requires larger acreage. You need to be able to capture larger pieces of acreage. And that's why in most frontier areas, blocks are maybe 3,000 or 4,000 square kilometers. And that stymies, I think, a lot of exploration in the Gulf of Mexico because you're competing for that acreage. It's very difficult to accumulate the size acreage footprint that you need to offset the risks and costs that you're taking in. Unfortunately, this is actually something that the Congress would actually have to become involved in, so I'm not really hopeful that's going to get taken care of this year. But it is a big issue. And then finally, this idea of regulation, the U.S. has done a great job on many fronts there in being able to efficiently move through the regulatory process. And I know from APDs and permits and exploration plans, that's a relatively efficient and effective process in the GOM, which allows great activity. I think we recently had a well that was captured to spud 9 months. From the idea that the geologist had to spudding the well was only 15 months. So that's great. You're not compromising the environment. You're not compromising anything for the country, but you're moving that investment rapidly forward. So I'll just close there and say these 3 ideas, trying to get in the sweet spot of those ideas when we're looking ahead to how are the Americas going to be doing in the next decade or 2, you'll see a lot of movement and variation in those 3 variables. And when you get into that sweet spot, that's where all these explorers are ready to compete and put in money and see if we can find those great rocks and great fluids. Thanks very much.
Now that we attracted you all, time to collaborate, and that's what Cindy will talk about, how to create value by collaborating. Cindy.
Okay, I, like Erik and Liz, am a geologist, and I cannot do anything in 1 slide, but I've kept it to 2. I can also not give a presentation without a map in it. So the first thing we're going to do, if I push the right button, which is, yeah, you say that's easy. Nope, I'm going to look at Erik's slide again. Okay. First thing we're going to do is the obligatory map. And so, as Sandeep said, we're going to talk a little bit about collaboration in the industry. And the map that Sandeep showed earlier showed the Gulf of Mexico as one of the most mature basins, even in the Deepwater, in the Americas. So we'll use that as the sort of example, the analog for how the industry can collaborate. So first thing I'd like to do is show this basin. The geology never gets the political memos, right? This basin, when you put it together, it extends in the onshore of Mexico and the U.S., and the offshore of Mexico and the U.S., and little tiny bits of other countries as well. So the rocks actually cover a lot of different geographies and a lot of different political grounds. The rocks are also, I think as Julie and Sandy pointed out, some of the best in the world. And when you put the resources that have been discovered to date in this basin, in the onshore and the offshore, in multiple countries, you've got pretty much 250 billion barrels, sort of known to be discovered. This is not yet defined. So this is one of the world's most prolific hydrocarbon basins. And again, the geology doesn't know, it's collaborating with itself for the most part. But what opportunities are sort of thwarted and then there to be worked through with regard to collaboration? So we'll talk about that next. On what part of this slide we just talked about, sort of the Gulf of Mexico, just a little bit of background building on what Erik said. Gulf of Mexico offshore, primarily the Deepwater, supplies almost 20% of the U.S. crude oil supply and about 5% of the natural gas. And again, just an example of what Erik was talking about for the citizens of the U.S. The offshore creates one of the leading sources of revenue into the U.S., and I've heard it stated by the government that behind the U.S. IRS, or people's individual tax returns, the energy industry is the second biggest contributor to the federal income, $5 billion. This is 2015. And a lot of that comes from the Gulf of Mexico. And then just a little bit of underpinning on jobs. There are billions and billions, multi-billions of dollars invested, and lots of jobs, hundreds of thousands of jobs created directly from the U.S. Gulf of Mexico, and then those all have sort of knock-on effects and extensions into the economy for the U.S. So
pretty exciting just examples of maybe some of the points that Erik was making. Okay, now let's talk about collaboration. So Erik teed up one of the challenges and opportunities in the U.S. offshore, and we see it really, really extensively in the Gulf of Mexico, are these small 3 mile by 3 mile, for the most part, lease blocks. And so most prospects in the Deepwater, they don't neatly fit into one of those blocks. So the competitive bidding round does create what we call natural partnerships. So you're bidding in isolation or in limited partnerships, and usually, as Erik said, you don't tend to, when you go to lease sale, you might acquire part of a prospect, and another company or two or even more may acquire other parts. These form what we like to call natural partnerships. Those natural partnerships, how many of you guys know the term frenemies? A lot of times you're coming together, and you're coming together with different perspectives on the opportunity of those blocks. You're coming together with different seismic data sets or geophysical insights, and these natural partnerships, sort of force you to collaborate and probably come out with a better view of the prospectivity, a better sort of opportunity set, and more realistic, and probably in some cases reducing some of the uncertainties. It also brings different experiences. So companies come to these things with different ideas, different histories around the world, and all of that is actually pretty good for the maturing prospect. It's hard work, though. I don't say frenemies lightly. You end up really compromising, coming to consensus, and collaborating to get a prospect sort of matured through drilling, or a decision to not progress it further through a lot of different viewpoints. And so that's actually good. Usually, by the time you've unitized a discovery or a tranche of these 3 miles by 3 mile blocks, you're more friends, and you can move together in a more constructive partnership. But it is always challenging, and I think in those tensions are pretty healthy. One of the things that did kind of come together really in the mid to late 1990s in the Gulf of Mexico that does represent a huge effort in collaboration is the sort of advance of these large-scale geophysical seismic surveys that prior to that, people were going, we're going to do a regional seismic survey. It's going to be like 10 miles by 10 miles. And that's, as you know, sort of a drop in the bucket today. But the geophysical industry, the exploration community took a risk and said, yeah, we're all competing against each other, but the efficiencies, the advances in technologies are going to be gained through collaboration in the geophysical world. And there's much more upside to getting a high-quality, consistent data set than there is each of us going out and trying to postage stamp. So the Gulf of Mexico is one of the basins in the world that's driven this collaborative, wide-scale imaging advances, both step changes in geophysical acquisition and geophysical imaging. And Liz, I know, will talk a little bit more about sort of some of the details of that, but I just want to say a lot of that happened here through collaboration and bringing a lot of people together to progress the industry. So collaboration within the U.S., within the Gulf of Mexico, is really important. It's not always been easy, but I think it does benefit all of the different companies involved. It certainly can be challenging for the contractors and the service side until the operators and their co-owners get their acts together. But I think it is good for the government to have so many different perspectives and so many different types of eyes in the basin. And certainly we've benefited from excellent geophysical innovations in this sort of natural laboratory in the U.S. Collaboration, I wanted to just tee up the conversation about collaboration across borders, and I think Tim Duncan will probably say a little bit more. But, you know, as we said before, the U.S. Gulf of Mexico, at least the central and western Deepwater and the shelf, very mature. Still lots of opportunity. Don't want to go on record. There's still a ton of opportunity in this basin, but you know, very mature from a production and exploration standpoint. Whereas offshore Mexico, opening up both the shelf and the deep water, is less mature. The opportunities to take experience in the service sector, experience in the exploration sector, from across the border, and of course, indeed, industry around the world is pretty has been pretty significant. So you've got contractors who already know the physical conditions, physical oceanographic conditions of the Gulf of Mexico. They're able to take that experience from the Deepwater U.S. straight into Mexico, and it's been amazing how quickly. It may not seem quick to you, Tim, but to others who have worked. But I've been really, really impressed with, you know, sort of the ability of the industry and certainly with the ability of the U.S. Government to move forward. And I think there's been a direct benefit from all of the different sectors moving forward into that, you know, bringing that experience into exploration in the Mexican offshore. I also have seen and been a part of a lot of collaboration between the regulators, and I think it's been really nice. Many different aspects of the U.S. Federal government have been open with sharing. This is the way we've done it in the U.S. with Mexico as they've opened up. And it's been neat to see the governments collaborating, neat to, and you know, really become kind of proud of seeing the opportunity to help our neighbors benefit and also bring new sets of eyes to what could happen in the U.S. Gulf of Mexico. And I touched on this a little bit, but just globally, the Gulf of Mexico continues to learn from the rest of the world. People move around, they bring ideas from other parts, especially the clastic basins around the world, and we continue to get ideas from West Africa, from the North Sea, from other parts of the Atlantic margin. And we try them. Some of them work and some of them don't. But certainly geologic concepts coming into the basin, geologic concepts being exported from the U.S. Gulf of Mexico to other parts of the world has really benefited us as a global industry. And the people coming in and out has really made a difference in how all of industry progresses. And certainly technology, the U.S. Gulf of Mexico, it's a tough basin. It's one of the hardest basins in the world to explore. There's so much salt out there. You know, we love the salt. We hate the salt because it messes up the imaging. We love the salt because it helps create the structures that set up the deep water hydrocarbon system, petroleum system. But that makes for some really tough geophysics and some tough pore pressure analysis. That complex geology, a lot of times companies are collaborating and addressing that here first. Then those technologies are exported out to the rest of the world, especially in imaging. We've also benefited here in the U.S. from import of a number of different technologies that are tried and play concepts. One of my favorites was conversations over the last few decades about the use of FPSOs in the Gulf of Mexico. And I mean, we were very dogmatic that we would never be able to make that work. We would never be able to there were so many reasons why an FPSO wouldn't work in the Gulf of Mexico, and certainly, if you were at the OTC dinner on Sunday, you saw Carlos Maestrano, celebrated for his work not only in FPSO development, but also for bringing that technology to the U.S. Gulf of Mexico and successfully demonstrating that FPSO could be a part of the mix here. So U.S. Gulf of Mexico, we create it and export it, and we also very humbly import it and benefit from the rest of the world's ideas. So with that, I'd like to close out on collaboration, and we'll move on to the rest of the panel. Thank you, guys.
Well, when I first met Carlos, I asked him, coming to Americas, he said he is in Americas. He's just growing here, and he'll talk more about what Ecopetrol is doing.
I don't want to go out of Americas. Thanks. So, good morning. Thank you. Good morning to everyone. Thanks for being here. First, I would like to make a confession. I'm not a geologist. I'm a pure petroleum engineer, and like the world's best coffee, I'm 100% Colombian. So that's me. So what you are about to hear is a Colombian story, okay, of the Colombian National Oil Company that made a decision to stay in the Americas because it felt that Americas is its backyard, and it was the best place to play its strength. So the decision that Ecopetrol made was stay in the Americas and look for opportunities outside of Colombia and make sure that in doing that, the company grows and provides what the country needs and also makes it a good place to work. So, this thing, I need to, just the ball, okay, good. So first, I need to build context and provide you with some background about Ecopetrol. So I would like to use this slide just to tell you, very, very short story about what has happened in Ecopetrol and what has been of Ecopetrol in the last 5 years since the industry downturn, the price crash. And we're very proud to record that last year was the best year for Ecopetrol in the last 5 years. And when we present this plot, the key message that we would always want to convey is we've been a company that the downturn found in a not very good place. We actually went into a pretty bad year in 2015, losses, but then reacted to that situation by transforming the company. And by that transformation, or going through that transformation, the company has found a path to perform and provide good results and want to be producing even better results. So one of the things that has happened in the last 5 years is that the company took a fresh look on what was needed for the company to go and sustain production, find resources, bring research to the books, and at the same time provide the opportunity for the employees, to go out of Colombia and also to build some financial strength as well. So the most important thing that has happened in the last 5 years is that the company has managed, to open operations outside of Colombia and do business in the most prospective areas and basins in the continent. So we've been in the States, U.S. Gulf, for almost 9 years already. From that experience, we have built, a better understanding of what it takes to be successful in the industry. And with that learning, we have gone to Mexico and we have gone to Brazil, where recently we managed to get into the pre-salt with 2 participations with companies that are known as being 1 or 2 of the best operators in the world. So from that perspective, the company is ready to look at the next 3 years where production is expected to increase. The company last year produced 720,000 barrels equivalent per day. It was a company that managed to replace reserves in the order of 130%, and also built a very healthy cash position, cash needed to expand the business in the Americas. So we're ready to go in the next 3 years, with a plan that will allow the company to make a much more presence in the area. So, Americanization, we call it Pan-Americanization. Company is determined to become a Pan-American company and to become a known player in the offshore industry. And for that, what the company has done basically is chosen to follow a criteria whereby we have 4 main principles in that criteria. One is a company will go where the resources are, i.e., we will be looking for the good rock, okay, and the oil in that rock, in vast amounts. Also, we're looking for markets where maturity provides the right conditions for a company to build a good business. Also, looking for efficiencies that the company needs, the business needs, as a matter of fact, capital efficiency, cost efficiencies, return on investment. And last but not least, we will go to places where capabilities, organizational capabilities can be built. By building those organizational capabilities, Ecopetrol will become an offshore player that now is a non-operator, but will fulfill the aspiration to become an operator, offshore operator, in the not-too-distant future. So we have a roadmap, and that roadmap has some milestones, which I thought it was important to bring some of those important milestones. We've been an onshore company, mainly, so pretty well familiarized and very successful in onshore operations, but offshore will allow the company to get play diversity. The place that we have needs some new plays. The set needs more plays. So we're looking for play diversity. We're trying to diversify risk, also grow the business, improve resource life, which is a very, very important target goal that the business has, and also to improve revenues. And what's most important is to make sure that we continue giving the shareholders the value that we promise. And in doing that, the company continues growing net income, dividend, and returns. Our current situation with regards to cash, I already said it, is very healthy, and that gives the company the financial strength to go out and try and find more, look for opportunities, talk to asset owners, and offer not only the financial position, but the strengths that the company has grown over the years. Caribbean offshore in Colombia is what we call a business opportunity that is up for grabs. Some of the reason why we think the Caribbean is that opportunity is because the basin clearly is underexplored. The basin, even though there have been some drilling activity and some discoveries in the last 8 years, we think that there needs to be more exploration, and we count on the good results from those explorations, exploratory activities, because the basin has prospectivity. It has been already tested, proved by discoveries that have been made in the past, and Ecopetrol has a mission, and this has to do with being a national company, to help Colombia as a country and the government of Colombia to grow revenues and grow or create wealth by making the offshore industry in Colombia a much more mature, intensive, bringing new players, bringing reputable companies that will help us confirm that the potential is in the basin. So right now, I mean, that is what is in the plan, and that is against the backdrop of a country that do have open bidding system that is in the process. The ANH, the National Agency for Hydrocarbons, is in the process of reestablishing regular bidding rounds to make sure that there is continuity in the business. And also, they desire to implement even more measures in the contracting scheme that there is today to make it more attractive. The thing is, how to make Colombia an attractive country by making the regulatory system what the industry expects to have. We expect to see in Colombia more players. We already have some very important players. I'll just mention a few that are in the slide. We have Shell, Noble, Repsol, Anadarko is there. We're partnering with some of them, but we think that we need those good operators to bring more technology, to bring the resources that are needed to be successful in exploration that is clearly a frontier exploration. There is the need also to build the offshore capabilities, and there's also the need to have partners, companies coming and playing the local game of meshing with the local culture and helping the offshore industry in Colombia to become a much more mature and interesting opportunity for the industry. My last slide has to do with something that is happening as we speak. There are two discoveries that are in the bottom part of this slide. They're called Gorgon, Kronos, and the Purple Angel that were made in the past, in the recent past, that have become 100% working interest of Ecopetrol in the last year, and for which Ecopetrol is planning to tender, to go out and offer these opportunities to the industry for a farm out. The data room has been opened in the next 3 weeks, and we would like to invite companies that might be interested in coming to a province that has been proven to be a gas province. There is some production that's been for many, many years in the past. Several TCF have been produced already from the basin, but there is the need to go into deep waters and test the place that may add up, reserves, resources in a very good way. So, what is the opportunity that is for the industry to come to Colombia, to stay in the Americas? Now is called Caribbean Offshore Colombia, where Ecopetrol will be offering participation in the appraisal and development of 3 gas discoveries in the past. The numbers, can go from 5, 11, 12 TCF that are to be confirmed. But the petroleum or gas system is proven, the play is there. There has been some activity already. There is seismic in a good amount, 160,000 square kilometers of 3D seismic have been shot and are available. And the conditions from the country, to the participant, to the companies that would like to enter the country, will be those that will favor investment and will favor the development of the resources that are there. With this, again, I just wanted to convey this message to you. The offshore is something that is in the Ecopetrol agenda. Ecopetrol is a company that is looking for more opportunities, building organizational capabilities that will make a company a successful player in offshore, and is planning to go from where we are now, U.S. GOM, down to Argentina, looking for opportunities, trying to bring more resources and become a partner of choice for the companies that are already there or want to be exploring in the waters of Americas. Thank you.
We got a business opportunity up for grabs, and the person who can grab it is Tim. He'll tell you how to pace it up. Tim, you got to pace this up. Please help me welcome Tim here.
Good morning, everybody. It's great to be here. I try to do this every year. I would tell you that, for those of us that are public companies dealing with the capital markets, there's obviously a lot of discussion around the shale plays. I am a son of an old Amoco offshore engineer. I grew up watching this in the Astrodome. What's so neat about OTC and congratulating it, it's on its 50 years. It's a week where we can step back and remind ourselves that we're pretty important and that what we do is important in the broad global economy. And that what we do is very safe and very responsible. If you get a chance, I would tell you, piggybacking some of Erik's comments, the BSE has an interesting report around just broad safety statistics and just how well we do offshore compared to other industry segments around the country. Typically, if you take all the manufacturing segments around the country and bundle those up together, what we do offshore is four times more safe. The only industry segment safer than what we do offshore. And I would again, buttress Cindy's comment, it's a pretty hard barrel to produce, is the nuclear industry, and I think I want them winning. So anyway, it's a very, and again, there's not a lot of time where we remember and remind ourselves. I call it the offshore prom. It's kind of once a year. We get dressed up and we kind of celebrate what we do, so it's a good time. So my contribution to this panel is really defining in all of this a little bit the role of an independent. Ultimately, when you're an independent, something that you have to keep in mind is you can't just meet expectations. The companies on this stage are the types of companies we strive to become. They've set the standard. We can't meet that. We have to figure out how to exceed that when you're dealing with difficult jurisdictions, certainly international jurisdictions. And we have to have a role in when you're growing and trying to build an industry in a new entrant or in a new basin that's opening up, such as Mexico. We have to figure out how we can fit our model into that system and how we can exceed expectations and understand that, look, we might be at the bottom of the food chain, but we do, I think, play an important role. So we're going to talk about the role we play and the characteristics we have to be successful in these basins. So just a quick overview on Talos. So it's a company that we founded in 2012, 5 guys, a credit card, rented office, all those things you think about. And later when we take some questions, I love taking technical questions, taking operational questions. I like taking entrepreneurship questions, capital market questions. So, we can talk about all those things. We've grown that business over time. In the fourth quarter, we had over 50,000 barrels equivalent a day of production. We had over $1 billion of pro forma revenue last year. Again, for a company that started with 5 employees, now we have almost 700 employees when we get into kind of full-time and contractors. But what do we do? What exactly are we trying to accomplish? Our role in the U.S. Deepwater Gulf of Mexico, again, we like mature hydrocarbon provinces. We like broad and useful geophysics that we think we can reimage, and we need to be in areas where we have a skill set and that we can operate. Our role in the U.S. Gulf of Mexico is to look at more mature assets that may not be material and may not be kind of as strategic to the operator of those assets, figure out how to buy those later in the life, ultimately really for the only reason to improve the economy of scale of what I would call that mid-sized prospect that's still there. That's a risk reward we can wrap our arms around. And to do that very, very quickly. As you can imagine, for those of you that are following public companies, there is certainly a lot of emphasis on generating free cash flow. We frankly are a little bit humored by that for those of us that are offshore, because if you try to build an offshore business by wildly outspending your cash flow, you might find yourself not lasting very long. So managing and building something inside cash flow is kind of the hallmark of how we've built this. But to do this, we have to manage risk reward. So if we can be a reasonable counterparty, if we can be someone that the majors can trust, go in there and buy a mature asset, and then ultimately have that unused capacity, we can start doing things around those facilities and bring that back to the facility and basically improve our economics and then again manage our free cash flow better. What happened in Mexico is we were building Talos. We wanted an oil business. We wanted to have a little more scale. We had built and sold 2 businesses before. This was our 3rd one. And we saw the reforms happening with respect to the energy reforms in Mexico. We looked at ourselves and said, we've built our career following some great operators around the world in the U.S. Gulf of Mexico. Surely we can figure out how to follow one operator in that type of province that's been there for 80 years. But we needed to know it had some of the characteristics we were looking for. Did it have a similar geology? Cindy talked about that. Did it have geophysics that we could use and get into? Come to find out, Pemex obviously had shot a lot of surveys, and can we work with ultimately the jurisdiction and the regulator? We would tell you we decided that we were going to have to take our chance on that, and I think that's worked out fairly well for us. But it checked some of those boxes that we were checking in the U.S. Deepwater, a little more emerging markets, but a mature province, and that was the starting point. This, again, just shows kind of who we are and the trends we're playing in the acreage set. So this is an example of, again, what I think the role of the independent is. So this is in the Green Canyon area. You guys know that in the U.S. Deepwater Gulf of Mexico. We did a small transaction. If we just announced this transaction, it would not look, A, material, or B, very interesting. So it was a 1,800 barrel a day asset on an old 100 million barrel field that had 30,000 barrel a day facility. That does not seem very interesting, except for the fact that there's things to do in the Green Canyon area. So we closed this transaction. Again, we try to execute on that, make sure that those on the other side feel good about that deal, and then we start gathering. We gather a prospect that looked like it wasn't going to be drilled by an operator. We gather things in the federal lease sale. There's a stranded discovery we try to put some win-win economics towards, and then we build a capital program that pulls all that back to a facility that we bought in what looked like a seemingly uninteresting transaction. That's the role we try to play in these mature basins. It's an exploration-driven strategy. It just does M&A as a means to an ends to kind of drive the economics of our exploration efforts. And again, doing that inside cash flow because we understand that's what the markets want. Frankly, we want to maintain a healthy company. But we need to do this fairly quickly. And so as we mature post-transaction and we start building these things out, here's 3 examples of subsea tieback projects. I think what makes each of these interesting, one of these is in the Mississippi Canyon area, and then 2 of these are in the Green Canyon area, where our biggest asset, we flow back to the Helix Producer 1. In each of these examples, and I don't want to get misquoted, so I'm kind of looking at this at the same time. I think this is right. But we drilled, these are brand new subsea infrastructured wells, drilled, completed, hooked up, produced in 6 months. And that's quite a bit, without incident, efficiently, and that's important for us. We can't wait. We don't have the luxury of waiting 2 years for something to come online. We have to balance, particularly if we're developing, and we're going to talk about Mexico in a minute, particularly if we're developing an asset that could take 4 to 5 years to come online. If I'm using 20% of my capital budget to try to appraise and develop an unbelievable asset in offshore Mexico, the rest of my capital program better be efficient. And we have to drive that efficiency inside our shop. Again, we have to understand who we are and what's expected of us. We need to make sure we do this, and we've thought this out in a way that does it safe and efficiently, but there has to be urgency. And we try to bring that to the marketplace, and I think we try to bring that inside even the energy reforms itself, which we're going to talk about next. I think what we hope to provide is an example of why you want as many participants playing in a reform as possible. You certainly always want. We tell the funny story, I think I've said it 1,000 times. When they announced the winners in the very first round, 1.1, national TV, they're opening up the envelopes, they're sticking them right there. They wanted Erik's group. They didn't want us. They got us. And we understand that. Why wouldn't you want Exxon to be the winner of the first one, or Equinor, or Eni, or Chevron? You ended up with Talos. And by the way, who the heck are those guys? And so our job is to make sure they understand who we are and what we're trying to accomplish. And frankly, we have to exceed their expectations. I think if it would have taken us 4 years, or if you will, the last 6 months of the primary term position to spud Zama, people would ask themselves, was this worth it? But if we can go secure the lease, reprocess the seismic, and spud a well inside 2 years, I think people say, all right, now this might get a little more interesting. And that's what we're trying to do here. Obviously, this talks about some of the things that I think in general the private sector brings to the energy reforms. We just caught a 700-foot core whole core in offshore Mexico, one of the biggest whole cores, if not the biggest, ever caught in offshore Mexico. And I think that's important. It shows that the private sector is willing to stick their neck out there. They're willing to take some risks. They want to share that understanding both with their regulators and with other industry partners. And we want to be a part of that. And we're trying to be a part of that in offshore Mexico, and we're proud of our efforts there. Again, this shows part of the reform. So our blocks are in blue. There was a moment there. It was a brief moment, so let's not overplay my hand here, where the only operators in the country were Pemex and us. It took about 3 months later to when we bid on our next bid round, and our first bid, which I felt fairly happy about, we came in 8th out of 9. And so, it speaks to, again, for those of you that think about varying subjects here, but, thinking about entrepreneurship, we can't compete with these great companies from a cost of capital perspective. We don't have the patience. We don't have the benefit of the doubt. We have to find processes when they're not perfectly efficient, and we have to find a way to kind of put ourselves into that process. So while a bigger company might be waiting to look for the transparency of an auction, we have to participate in that auction if we want to prevail. And so we needed to be in that first round. We needed to try to identify things that were interesting to us and frankly cross our fingers and hope. We hoped 5 more times after that, and we lost every one of them. And so it speaks to understanding, knowing who you are, knowing when your moment is in front of you and trying to make the most of it. And we've tried to do that here. And then once we prevailed, we've had to take on, I think, the responsibility of not only working with the partners that came after us and won after us, but knowing that we still were we were going to drill the first true exploration well by the private sector in offshore Mexico. That needed to go well, not only both with respect to our HSE performance, but hopefully in the results. We needed to advance what we were all trying to do here. We've taken that role, I think, very seriously. It's something we're very proud of, and I think it's something we're trying to deliver on. We're also working with our friends at Pemex, so part of the discovery rolls onto their block. So as you can imagine, we're in some of those first unitization discussions. Everything we're doing there, typically we're doing for the first time in the country's history with respect to the private sector. And so again, it's something we're very proud of. Well, that was a quick stop. With that, I'll hand it over and we'll go from there.
Yeah, Tim, you went pretty fast. Now that you increase the pace, Liz will tell you how to build and sustain it for a long, long time to come. Please help me welcome Liz here.
Thank you. Well, thank you, Sandeep, and thank you, Julie, so much for putting on this panel and having me talk this morning. So I'm the last of your geologists. I do have one small map. I have a lot of slides, but we go through them fairly quickly. So up on the screen is, well, it was a picture of Bigfoot, but it's not. So it's my first slide. Oh, it's the next slide. Okay. And what do I, oh, here we go. Just move this. Perfect.
You got it? No.
So up on the screen is a,
Am I missing?
yeah.
Okay.
Nope.
I got
See?
it. You got it. It's there.
Perfect. Okay. Up on the screen is a picture of Bigfoot. This is Chevron's latest new platform in the U.S. Gulf of Mexico. And I had the privilege of going out here and visiting this at the beginning of April. One of the things that I love about this business and the job that I'm in running exploration is that I get to meet people around the world and work in forming partnerships. And the other is that I get to see some of the really cool technology that we develop and deploy around the world. So I'm going to talk about those two things, partnership and technology and sustaining the business. So first on partnerships. In the Americas, Chevron has been here a very long time. We have a very dynamic and prolific set of opportunities and activities. Every country is different, and within each country, the landscape changes over time, as you know. The key to Chevron is long-term presence and long-term partnerships. We've been in places like the United States and Mexico and Brazil for over 100 years as a company. And we've been in Venezuela and Colombia, Canada, and Argentina for nearly as long. I really do believe that it's these relationships that you build over a very long period of time that helps sustain the business through all of the changes that happen in any one country, and helps us sustain the business through the inevitable business cycles that we have in the upstream. And those things also help us manage above ground risk, many of the things that panelists already talked about this morning. Eventually I'll get the right button. I'll say in sustaining partnerships, we look to share long-term vision, expectations, alignment, and commitments. We like to build productive and trusting partnerships, and we believe that social responsibility is a core of those long-term partnerships. Relationships and partnerships really come in many forms, and strategic stakeholders include the communities in which we work, governments which we work with, service companies, national oil companies, and other groups and companies active in a geography. I also like to mention the industry trade groups that we work with in all of these places, and these industry trade groups provide an opportunity to partner within the upstream and work together for very thoughtful advocacy on some of the things we talked about, lease rounds, regulatory environments, those kinds of things. With headquarters in the United States and a very strong deepwater and shale and tight, although we're very focused on deepwater in this panel, presence in the Americas, I think we build and rely upon those long-term partnerships to manage day-to-day business and build new growth opportunities. The other piece of my talk this morning is on the technology aspect of building and sustaining business in the Americas. You know, the development and application of new technology has enabled our business to be what we are for a very long period of time. We can deliver more value from assets, and we can make more challenging assets commercial with the advent of new technologies. We're drilling deeper below the surface and in ever deeper water to reach new resources. The evolution to deepwater exploration and development would not have happened with the partnership that we can have with the service companies, between the operators, and with local governments. Those folks all together provide the collaboration space that's needed to build new opportunity and build new technology. In the Americas, we are very advantaged by good rocks. I think you heard that theme from all of us this morning. And in so doing, and having the proximity to some of the big technology centers in the United States and Brazil, those two things together, great rocks, great people and technology in the region, really, I think, has led to the advantages that we see here. We also continue to innovate and advance technology in base business, finding unexpected and practical and clever ways to overcome challenges and deliver more value. So I have one example. So again, we'll go back to the United States Gulf of Mexico. And even if we just look at the deepwater US from the late 70s and the early 80s to where we are today, there's over 25 billion barrels of oil equivalent that have been discovered in that period of time. It started with a dream, right? So all good geologists start with a dream. I think there's probably more hydrocarbons out there in deeper water. And then it came with the advent of new technology. So we needed seismic imaging technologies, new acquisition, new processing, able to see below the salt. We needed new drilling technologies to drill in deeper water and deeper water. And we needed new technologies then to ultimately develop those resources and bring them to markets. I think this slide really sort of tells the story of what can happen in a very prolific region. And then just talking a little bit about technology. I'm a geologist. I know a little bit about a lot of these things, and you are in the prime space for the week to get the deepest dive I think you could possibly want into any single technology that's applicable in deep water. So I'll just touch on a few here. The first is seismic data. I think the advent today of modern acquisition techniques coupled with some of the new high-performance computing capabilities that we see let us not only get better data, but use more of the data that we're acquiring. So acquisition and imaging lets us see below salt, it lets us see ever thinner reservoir beds, and really lets us put together the picture of where hydrocarbons might be, because we can't actually see them physically. I think it's really important that the governments and the countries in our region continue to allow for seismic acquisition technology. I think one of the things that was really great about Mexico is as the reform was happening and they opened up for investment by the other operators, there was a real recognition and availability of the vendors to come in and shoot more data, and then we all had the opportunity to buy what we wanted and help us make the good decisions that we need to make. Other countries, the United States, you see a very open and a lot of acquisition of new seismic and well, again, across the region. The second is on drilling. So again, drilling deeper, higher pressure. We're working together to develop 20K technologies in industry and efficiency. So the newest drill ships that are coming out and are being deployed just let us drill much more efficiently. And when we save cost, we can do more of it. The third is facilities, putting more equipment on the sea floor and long-distance tiebacks. I think that technology of expanding the distance that you can tie back a new discovery developed with subsea technology to an existing host is really going to change the game again in the U.S. Gulf of Mexico. There's so much infrastructure, so much available ullage, and so much exploration opportunity. You link all three of those things together, and there's a tremendous way to create value. Other places in our region that have infrastructure, and as infrastructure builds out over time, we'll be able to use that technology from the get-go to design hosts and then developments that make the most sense. I'll also talk about standardization. I think that's probably a theme again this year at OTC. So in Deepwater, coming up with standards across the industry to help us develop things more quickly and more efficiently and more cost-effectively will make a difference. And then finally, in operations, we can talk about big data. So the opportunity to instrument just about anything you can think of and collect data back and have the analytics behind it to help us understand what our reservoirs are telling us on a daily basis as they're producing, I think is also going to revolutionize how efficiently we can produce resources. All of these things together drive development costs lower, which means more discoveries and assets have a pathway to commerciality. And with that, I'm going to turn it over to Chris from Equinor. Thank you.
Go ahead, Chris. We are Sol set up. It's coming to Americas versus taming cost. Now that we are here, how do we do it?
Thank you, Sandeep. You know, I was just reflecting, coming to Americas, as I look at our panelists and our companies, you know, half of the companies are not headquartered in America today, right? So one could argue that maybe we've already here, right? So how do we grow it further? So how do we advance? Mouse? Okay, I have one slide, and I intend to be fairly quick on this slide. Talk a little bit about taming costs. You know, I think we should recognize that big strides have been made in the industry to increase our cost structure, but there's still an opportunity for us to focus in this area. We have really witnessed a CapEx roller coaster over the last few years, right? It's really three periods I would describe it. The first period we saw, you know, increased pricing, investment, which gave us production output, followed by very high cost environment, very high price environment, but ultimately we saw production not increase. And then lastly, as you kind of make the roundabout there, we see where, you know, through portfolio actions, through focus on cost, mega project ramp-ups, we actually saw projects coming in at much lower cost. So I guess the question would be, how sustainable is this cost reset? Is it actually a cost reset? I think through simplification, standardization, digitalization, these are key. U.S. Gulf of Mexico today and other parts of the world are seeing break-even costs in the 30s, in the mid-30s, right? Back in a $100 price environment, we were seeing break-evens at 70 and somewhere in between 40s and 50s. So at break-even prices of 30s, one could ask, is this now competitive with unconventional, right? Does combining the unconventional and offshore create complementary portfolio advantages? I personally believe the Americas are well placed to retain these structural improvements. We have diversity of company mix. We have culture of innovation. We have accelerating schedules, and we have strength of supply chain, which I think many of my panelists have mentioned today. We see technology advancing. you know. That comes at a cost, sorry. That comes at a cost, but will yield substantial prizes for us. You know, for us, we have partnered with Total on development of the North Platte here in the Gulf of Mexico, focused in the 20K space. We know there will be future efficiencies and technologies, which is going to create tremendous value for the industry. I'm sure that's a very common theme for OTC this year, but we should see digitalization of work streams, advanced analytics and robotics, and remote control capabilities. We anticipated Equinor through these digital solutions, digital technologies, a field of a future concept which is very minimal footprint, developed at 30% reduced CapEx we see today, 50% reduced OpEx, 15% reduced DrillX at about 50% of the carbon barrel that we see today. And we envision in a blue sky concept of creating more than $2 billion of value of ultimately totally unmanned ultra-water, deep-water facility in the future. As mentioned, we have areas, most predominantly in the Gulf of Mexico, that offer itself to infrastructure-led exploration, which creates significant value. If you think about the ullage opportunities that we have here, particularly in the Gulf of Mexico, made reference to technology. Technology is pushing the opportunity for further and further tiebacks, which is creating tremendous opportunity, not only for improved cycle times, reduced CapEx, but it also de-risks exploration prospects and generally will provide opportunities to add lower carbon barrels to the portfolio. But the key really is, as we have more complex projects that return, how do we maintain this cost discipline? I think it's through maintaining capital discipline, efficiently delivering on increased complexity, creating the right incentives, and staying lean, right? I think we've heard a lot about staying lean and standardization, which is obviously a common trend through the industry today. And we've talked a bit about the opportunities for technology transfer and cross-pollination. I think we're clearly seeing the benefit of that, particularly in the Americas, and we're going to see more of that. And we've seen a lot of that at Equinor as well, whether it be technology transfer from our North Sea to the Gulf of Mexico and back, whether it be Gulf of Mexico to Brazil, North Sea to Canada. That's a trend that will continue on. So, from my perspective, our projects ultimately have to compete for CapEx globally. But I believe coming and staying here in the Americas is a good business decision. It provides the opportunities to enter deep water basins of varying maturity, and it allows for a portfolio approach across the entire region. Thank you.
Yeah, I tell you, you've heard all of us here, why we are here, what we are doing here, and how we sustain it here. And now the time for the third part. We call it audience response system. So I'm going to ask you guys to invest a little bit. No, we are not asking you to invest in Americas, don't worry. It's just invest your time a little bit and give us your responses. This is a time for us to reflect. We've been roaring like a lion here and saying we can do this and we got this in Americas. And now I want you to use your mobile here device and do some polling with me. We'll go live so what it is if you use your device and go to the website, you can log in that way. Or you can text using the text number there and join the polling. So there are two ways to do it. I want you to start. This is your turn now. Our turn is over. Our job is done now. I told you, you'll have to put something out here. We told you what to do. So I'll let you do a little bit, see if you guys are hooked up. I need to see some nods here. Can you hook up to the system? Yeah. You ready for all of us? Oops. This is all of us. You want us to go back? Okay. You'll see just the screen on your things which which will show up as questions once you kind of log in. What's that? Yeah, it'll be a blank screen right now. And then when the questions come up, you'll kind of start seeing the questions on the screen, which is right now it's showing. All right? Now that I've given my secret, this is what we were preparing for the panel. These are some fringe benefits of being in Americas. You sit down, you have dinner, good times, and then you think about what you'll do next. This is our panelists waiting on you. So do we go live here? So our first question is, and I don't know if it shows up on your screen, the phrase coming to Americas reminds you of the song, the movie. Columbus was first. Sorry if I hurt your feelings, Chris. I didn't say Viking were first, it was Columbus. Or Deepwater basins. You can continue voting. I guess you think it's a show, but I tell you, this ain't Hollywood, guys. Everybody out here is real. We have been working in the oil fields. You might think about it. My first question goes to Cindy. Cindy, when we called you first, and you're at OTC, when we said we want to do Coming to Americas, what did you think we were going to do here?
I have to admit, I'm kind of stuck in the Neil Diamond there. I thought of the song. And then quickly went to the opportunities on the surrounding the basins, especially being familiar with the Atlantic margins.
I think you'll influence them. They are now saying Deepwater basins. That's what they're thinking of. I think you're thinking right. All right, guys. I'll move you to another interesting question after this, now that you've gotten used to it. It's still trending. They really start believing us. It's not a movie anymore, guys. Everybody over here has been real. They are now characters. I will move to the second question. How does that work? Can I get to the next? Oh, click here? Okay. So that's a question for you guys. Now that you've heard us, how attractive are the America's deepwater basins to national oil companies from other parts of the globe? And I think it's so my first question goes there to you, Erik. You are with CNOOC out there, right? What attracted them here?
Yeah, that's an interesting story. When we had the acreage, and Shell was actually the partner with us in Guyana, and then as we got ready to finally drill the well after 15 years, Shell it wasn't a portfolio fit for Shell, so they left, and so we opened up this data room. We had, I think, 24 companies came through. And the only two that expressed interest were Hess and CNOOC. And our management at the time wanted two partners. So it wasn't much of a beauty contest. It was if you were willing to show up, you were in that game. I'd like to say that we were out there selecting people and choosing them for criteria, but they had a check, and it turned out really well for them. So. I will say they've been a great company to work with, as has Hess, going forward. And I would second Cindy's comments that there's a tremendous amount you get from working with partners. It kind of stretches your own organization, and they've done a good job with that.
Julie, you collect all the data. Tell me a little bit about what's attracting NOCs in the basins, besides the stories.
Well, I think a few panelists have touched on the portfolio benefits of being across multiple America's basins because of the variety of opportunities. And I think the same is true for NOCs. So you have NOCs that are looking for high impact exploration opportunities, and they have deep pockets like Qatar Petroleum, who've partnered with I think, quite a few of the companies up on the stage, down to Impex, who's been around in the US Gulf of Mexico for a long time. CNOOC, you mentioned, Petronas, of course, is a very big acreage holder in Mexico. So again, they saw an opportunity there to expand. They have been international for a long time, but to expand their international footprint with some some new opportunities, bringing their expertise in the offshore to Americas. And the list goes on. KNOC has been in the US GOM for a long time. So I think even though people tend to think of NOCs, and particularly East Asian NOCs being acquisitive, acquiring production, which of course there's those opportunities too, we're seeing NOCs also participate very heavily in exploration now. So because of the variety of opportunity types, we see them participating all across and all through that value chain, throughout, from exploration all the way through to late life production.
Tim, all your partners happen to be non-Americans here in your field in Zama. You have something to say?
Well, it's fantastic. No, it's look. I think one interesting thing, and obviously, we're partnering with Pemex, but just as a broad matter, I think these NOCs understand the role they play for their home countries and the responsibility they have to build their business and grow their business the right way. And it makes sense when they know the geology that they're working with, and you step back and expand that footprint. Petronas in Mexico. I mean, the geology in Southeast Asia is obviously conducive to some of the things we're doing there. So I think it's a natural extension. That feels like that ought to be 90% A, but I think it's obvious to think about where can we go from wherever we are.
Yeah. Chris, I can see you're shaking hand. You can, or I won't call you NOCs, but what brought you here?
Well, we're not NOC, but we're obviously not an American-based company. I think many of us have talked about the attractiveness, attractive geology, robust petroleum systems. Equinor, for example, we've had great success on the Northern Continental Shelf, but we're looking to diversify our portfolio and grow internationally, which we're doing successfully. But why not come to the Americas that has these robust basins and can deliver projects now at very good break-even prices and accelerated schedules? And just if you want, as an example, for my company set, East Coast Canada, we've picked up a lot of attractive acreage, which we hope to drill next year. Gulf of Mexico, we'll drill a well this year in Deepwater. Mexico, we have a couple of interesting blocks we hope to drill next year. Just picked up some exciting acreage in Argentina, and of course, we've been down in Brazil where we've spent $10 billion since 2001. So we obviously see the attractiveness to diversify our portfolio here in this region and similar time zones. Not to Norway, I can guarantee you that, because I feel that pain many mornings at 6 a.m., but at least across the region.
Yeah.
We'll take a break and go to the next question here. And we talked a lot about bid rounds, and we just wanted to get your input. Are regular bid rounds important to attract new players? It's a rig system. I need some orders here. You guys can see the question? A, yes, somewhat. This is the most surprising one. Liz, I'm thinking about you. I mean, I've never seen Chevron going directly. I mean, you wait for bid rounds mostly. But isn't there some other avenue of entering a country which you have tried, direct relations?
Well, absolutely. Every country has their way of opening access up for foreign investment, and we will use the methodologies that are available in those geographies. I think in the Americas you have a lot of countries that prefer that methodology of having an open bid round. So Mexico, we've gone to those bid rounds. You've seen that in Brazil as well. Colombia has bid rounds. And then you see other folks have, kind of a bid round. So Suriname has that open door policy. You go outside of the Americas and you see more geographies that are open to direct negotiation. But we'll look at whatever. So it starts with the rocks. If the rocks are attractive and look like a good fit from a portfolio basis, then you look at what is the access opportunity and see how you can kind of make that work. And then the last piece is the fiscal system. So does it all come together to generate sufficient value and materiality?
Here, Carlos, you have some influence here. You're with Ecopetrol.
Yeah.
And here, overwhelmingly, people asking you to put bid rounds. What's your mode of operations?
Well, let me start by saying that having the regular bidding rounds is important, but somehow there is also the belief that just having your acreage open for companies just to come and try and do direct negotiation is equally important. And case in point is what is happening in Colombia now. The ANH is seriously considering opening the whole country to what they call permanent allocation of acreage, which is invite companies just to come and have a conversation and look at the data, the basins, and come forward with proposals without having to go through the bidding rounds. So I think this is something that might be a change in a sort of thought process of a country. And as I said, Colombia is going through that sort of change. And we as a national company are clear that we have a role to play. And this is something that we've been doing for the last 2-3 years, especially offshore, is working with the government, with the regulatory agencies, trying to build a system that is not only robust, but is very attractive. And it really creates a condition that is conducive to bring many players. So,
Sandeep, one comment on here, because I get this a lot when I'm down in Mexico, is in my view, if you're trying to build an industry, I think it gets down to participation, and you want as many participants as possible. And certainly, if you have 2 or 3 big ones, that's fantastic. Something positive is going to happen coming out of that. If you have 30 to 40, you have something totally different. If you can get the banking sector involved, the service sector involved, now you're building something that's real and sustainable, and it's an industry. And I think in that example, where they had a clear and distinct 5-year plan, and everybody knew what that was, it fostered real competition and real participation. And again, for a company our size, we need that transparency so people view that we've been in there and done it exactly right. So I can certainly see the benefits of both types. Ultimately, you want whatever can attract attention and attract participation, but a well thought out bid round, I do think, kind of generates quite a bit of participation. Ultimately, that lifts up an industry or fosters an industry.
There's not going to be much bid rounds in Mexico.
Yeah, and then they stop.
So how are you going to enter the acreage in Mexico if BP wanted to enter? If you wanted to enter Mexico, there are not going to be any bid rounds. How do you think you'll make an entry point, if you were?
Well, and we have done that. A lot of it's through the collaboration, so looking bottoms up, where are the best opportunities, and if there's an operator and a set of co-owners who might be amenable to a discussion about farming in, trading, those opportunities are sort of always, they may not always be available, but people are always open to discussing the potential of bringing in or moving out.
So you're not hinting of buying a company or something
No.
in Mexico, are you?
But look, that secondary market doesn't exist if you don't have enough participants.
Yeah.
And I think that's
That's what
that's
it
an
is,
extension of the whole point. We'll see if they reinitiate those rounds later or not. But if there's a secondary market, it exists because there's enough participants to create that market.
Yeah, one of the really interesting things about Mexico is that they used a scheme where they bid government take, for the awards. So
Thank goodness.
the secondary market is is a little complicated because let's say you were watching all that bidding and wanting to be in the country, then if you don't have a position there, it's because you don't want a position there, right? I mean, essentially, if somebody outbid you, they bid a position that you're not willing to accept for your portfolio, which destroys the secondary market because you can't change that bid. Unlike a high signature bonus or something where that's somebody's past mistake, you can kind of come in and pay part of that, but not all of that. This sets a different deal. So it'll be very interesting to watch and see how the secondary market evolves in Mexico.
Say something, Julie?
Yeah, I just wanted to add something on, kind of building on that secondary market idea and something I think, Erik, you were talking about with the very large blocks where, which are important when you want to look at a new play. When we've seen this trend towards larger and larger block sizes, which I think countries felt in some ways that they needed to move to attract explorers, especially during the downturn. I will posit that sometimes that can have a little bit of a negative impact because, number one, you're limiting the amount of activity because there's only so many blocks, right, on which companies can drill wells. Number two, some of these blocks are so large and the acreage is so frontier that there is no way that a company can assess all of the plays fully on that block before it has to turn back some of that acreage. So we need to see especially in places like Mexico and Brazil, where there's been this big flurry of license rounds, to sustain exploration activity in the future, we need to see that acreage turned over. You know, the new licensing rounds are on hold in Mexico, very unfortunate in terms of, you know, continuing to attract new companies. But I think if there isn't turnover of that exploration acreage, and if that doesn't resume in the future, you know, the country, to be perfectly frank, I don't believe is going to be able to turn around its declining production profile by itself. You know, it needs that investment. So there has been, through that energy reform, there has been a recognition that external investment is needed, that Pemex could not continue to do everything by itself. Pemex is learning a lot from all the companies coming in, and is working in collaboration with pretty much everybody on the stage here. So yeah, I'm kind of drifting from the point of regular bid rounds. You know, sometimes they come a bit too thick and fast, right? We had a plethora of opportunities with Mexico and Brazil, and it was really an abundance of riches. And I think in some cases it meant that some companies with restricted budgets could not actually bid successfully in all of those. They had to pick and choose where they were going to bid. So bringing forward these opportunities to bid is very important. It's important to do it regularly, but sometimes, you know, don't just throw it out all at once as a big smorgasbord. You know, sometimes it pays to pace things out at a little bit of a sensible pace, and look at what the competition is globally as well. You know, who else is holding high impact rounds that might compete for those, you know, those dwindling exploration companies that you want to attract?
Yeah, I just build on that, Julie. I think you're exactly right. So that word regular is important too, and a real thoughtful approach to what does the competition look like, because everyone's competing for all of our investment dollars. What does the competition out there look like, and what's the timing, and then is there a thoughtful and logical way I can set out those timelines? So, you know, for example, Brazil, we're looking at, you know, at least 2 bid rounds coming up at the end of the year, almost on top of each other. So budgets are a piece of that, but there's a piece of that too, that we all have organizational capability that we're assigning to the highest priority things. Mm-hmm. And back to your point, Tim, you know, bringing in a robust set of competitors and a robust industry, just thinking about that word regular and being thoughtful on the timing is important.
So now I'm going to say some anomaly in the system because I'm talking geology. I think Exxon is an anomaly in this. When you went to Guyana, there were no bid rounds. And I've never seen Exxon really participate in bid rounds, although here I see an answer saying bid rounds are the best way to attract new players, but I've seen more approach of open access, which entices bigger companies like Exxon. Any comments on that, Erik?
I think we're active in the full spectrum. You know, I think we were very active in Brazil, which was bid round. We're active in the Gulf of Mexico regularly. But yeah, a hallmark of the company has always been trying to be an early mover and have these direct negotiations. You know, the early days of West Africa, certainly Guyana was in that boat. So yeah, I think we try to look at the entire thing. Okay. I think, you know, it's really about understanding the resource owner. What does the resource owner need? What's best for the resource owner, and then having that conversation, how the companies can work together.
Here, we'll take another question here from the audience. Our next question, which is also equally to the point here: do fiscal terms provide enough flexibility for low commodity prices? Oh, that's a straight answer.
I'd agree.
Now, Julie showed a chart of prospectivity versus investment in Americas. And I'm wondering, Julie, do you have a chart where you said if there was coverage for downside, you will have better investment?
Well, of course, Wood Mackenzie has tools that show you that, where you can benchmark the fiscal terms against one another. And while we were having breakfast this morning, and I was frantically looking things up on my laptop, because it occurred to me that for this question, I had in my head which terms gave flexibility in low commodity price. I thought, let me just check my inbuilt bias. It turns out I was wrong. So when I was looking at, comparing how some of these key deepwater fiscal regimes compare to one another, I was thinking, well, U.S. Gulf of Mexico, because it's straight tax royalty, is probably the worst on this measure, because it doesn't give you any cushion to low prices, or in fact to high costs either. And it does work pretty poorly, but the Brazilian, actually, in the way that we measured it, the Brazilian regimes, both the concession and the PSC, actually came out worse than the Gulf of Mexico, with a straight-up comparison with the same model field, which, if you take this field and put it into different fiscal regimes, which one changes the most in low fiscal prices? And the two Brazilian ones came out the worst. And Suriname, actually the Suriname PSC came out as just about the best one for cushioning against low prices, which is not at all what I was expecting to see. But Cindy, I know that Gulf of Mexico fiscal terms is kind of, you and I have discussed it a lot through the years.
I'll pile on and others can come back to me. And I think the Gulf of Mexico is an example of a place where you really have to apply long-term thinking. I know we're seeing some great examples. Tim talked a little bit about things Liz teed up, tiebacks and moving more quickly. But we're still, when you're talking Deepwater, you're still in a relatively long-term game, from the twinkle in the geologist's eye to drilling your first exploration well to actually final investment decision and first production. You're still talking, a number of years. And so these sort of tweaking and kind of changing the landscape, if you will, it doesn't change the terms that you have in your blocks that you've been awarded, but it does change sort of your momentum in the basin. And Gulf of Mexico is a great one where you can look at, slowly, we've been pretty stable on royalty. I'll just pick that one because it's pretty simple. In the Deepwater at sort of 12.5% for pretty much a decade. And then when oil prices started to really ramp up in 2006, 2007, the royalty price increased by about 50%. So royalties suddenly became, sort of 18 and 2/3%. So you've added another 50% burden on that royalty. Well, then what happens? Price has crashed, but the royalty's still high. And I can speak from personal experience that does kind of, it's lagging. It's lagging. The rest of the U.S. federal lands, including the shelf, have a 12.5% royalty, but there's not been any sort of compensation with Deepwater. So to me, it's kind of like the royalties should just be a stable part of the landscape. If they're going to go up, do that very, very thoughtfully and bring them back down if the commodity price fluctuates back down, as it has in recent years. Thank you for giving me that opportunity. Anybody else?
So Carlos, it's important for you to say something here. You're trying to get this people come in Colombia to invest. You got some pretty good prospects out there. Do you consider putting flexibility in your regime there?
Well, it's a matter of fact, we're counting on that. And I think what we're finding is that in our conversations with the government has been very receptive towards, hearing what the industry has to say in order to, again, bring, terms and conditions that are attractive. So I would say that in Colombia, in that part, the fiscal regime and the regulatory system are still systems that are in the making, which I think is good. And the other thing that is good is that there is a differentiation between oil and gas. Now, the country is more prone to make the gas terms much more attractive than, than oil, and to invite companies, to come and explore and find out resources. So again, Colombia, I think that this is the interesting part of Colombia as a country, that there is flexibility because there's the need, to build that industry. So opportunity for many.
All right. We'll go to the next question here, unless somebody has any comment on this.
I would just add
Sure.
that I think countries have to recognize that we're investing globally, right? And they need to recognize that although they may have their own fiscal ideas, those fiscal ideas need to be competitive on a global basis, right? Because after attractive rocks becomes attractive fiscals.
Yeah.
And countries need to recognize in certain areas where we're developing that it takes massive investment to develop technology, right? HPHT, and sometimes depending upon the royalty regime, that can be prohibitive, And I think some countries have figured that out. I think some have not. I think we have some opportunities here in the Gulf of Mexico, to be honest with you, which is hindering some things, including development of the marginal barrel, which makes it very difficult to do at the back end of a life cycle, and that's ultimately in the benefit of the resource holder.
Before you leave this, I would say, apologies, Liz, I would say that this is an area where we talked about collaboration earlier. This is why trade groups exist. This is why education exists. I am times somewhat, humored by a question where I get, are you frustrated with the pace of the government? I have to ask myself, it's a federal government. It's going to probably change control. And someone's asking me whether they're commercial enough. And I think you have to marry expectations and know that, look, you should have low expectations on commerciality for political animals that change, kind of how the government operates every 4, 8, or however many, what the cycles look like. So the point of all that is we have to collaborate to bring forward that education of, hey, look, we're competing against other basins. Here's the value of a marginal barrel. Here's the strains on our business. And I think that's what our trade groups do, and those trade groups are open to all of us. And I think it's just a quick plug for why that's important in our industry.
Yeah, I agree. I think what we're really talking here is how do we become, and we hear the term resilience a lot, right? So how are we resilient as an industry across the price cycle? Because no matter what these big deep water assets are producing for 20, 30, 50 years, they're going to see a cycle. So how do we make them more resilient? And fiscal systems are certainly a part of it, but there's a piece of it too that's around supply chain and local content regulations. And so there's a lot that comes into being more resilient in low commodity prices.
All right. Sounds good. We'll change the subject here for you a little bit. In general, is cross-border collaboration in America good? Yes, no, or mixed? Tim, you'll have to continue on that because you are in the world of that.
Yeah.
Pretty much in the cross-border.
Yeah, look, and again, I go back to one thing that they did very well in the reforms, in the energy reforms in Mexico, is they made that local content manageable in the early parts of that contract, and that allowed us to do actually more cross-border collaboration as a growing company and a young company, making sure we get things exactly right with respect to such things such as FCPA, diligence, and things like that. We needed some flexibility to work both with local partners and U.S. partners and get that exactly right. And so, anytime in some of these newer regimes that they can be thoughtful around local content, that it's a big part of what we do, but it doesn't absorb too much of what we do, we can have more cross-border collaboration with some of the service providers we have on both sides of the Gulf of Mexico. I think we've tried to maximize that and have the right representation of both, but it's given us a lot of flexibility, and we're grateful for that.
Carlos, you're in a very kind of a situation, I would say, as a country location. You are next to Venezuela, and you have, I guess, Brazil on the other side. So what's your experience?
He doesn't like where this is
Putting you
going.
under any trap. I'm just curious, is this cross-border relation for you working while you're inviting people to come there?
Well, no reservations at all. With regards to inviting companies or people to come, collaboration across the border is something that it is always in the work agenda. Companies are always trying to get some synergies, some economies of scale or scope by just looking, what is going in our neighboring countries. Unfortunately, I think the results are mixed. I don't know of many cases where collaboration has been done, successfully. So
We still have to wait, huh?
yeah, yep.
And I think Exxon, you are facing a similar situation as you keep doing your Guyana, you're butting against Suriname. Do you find them very receptive? If it ever happens, you get to Suriname
Well,
or with your discoveries?
in terms of the economics here, I mean, in general, we're a very international industry, right? I mean, people are spread all around the globe. You can't build anything from one country. You know, if we're going to do a development, there's going to be 10 countries involved in that conversation. Guyana, as an example, you know, we're out there. The boat is coming from Singapore. The subsea kit was built in Brazil, so you know they're neighbors. So all this stuff is absolutely essential and to the benefit of the resource owner, because if you dictated that it was all going to come from one place, it would take 10 times longer and be 10 times more expensive. So as a general answer, yeah, we always want to be moving stuff around the world as easily as possible. Now we get into the U.S. conversation. You know, we have all kinds of our own protective deals. We have the Jones Act. We have all these things that are maybe somewhat political. And so, you know, I think one of the things that the industry needs to do is really crunch the numbers and understand, you know, the assumption there is that it's somehow more beneficial to the American citizen to have all those vessels built and shipping in the U.S. versus in an international market. You know, I've never seen the analysis that really says that that's true, but it's intuitively hard to imagine that that's true. So you know, it's a question of understanding what the economics really are, and then communicating through industry groups, as was mentioned, and kind of, you know, trying to explain what the real economics of the situation are.
Right. Julie, does your data show anything? We've got to unearth the truth here.
Yeah, I mean, this kind of thing is not very conducive to the kind of data we pull together. But I would say, you know, we're seeing US and Mexico. When we did our panel last year, you know, there was a lot of discussion about rig movements between the US Gulf of Mexico and Mexico Gulf of Mexico, and how that needed to be very well managed and seamless so that we could have rigs moving back and forth. And I'll leave Tim to talk about what his experience has been on that. But you know, so logistically, I think there's been some progress. You know, that is where it sort of it makes the most sense. And I'm sure for Guyana, you know, your supply vessels and so on were coming from outside of Guyana. But as the country builds up its own capability, then that will change through time. And there was an interesting comment yesterday about, in one of the, it was actually Martin Stobel at Shell talking about this kind of thing where he felt that governments like Guyana, Trinidad, Suriname needed to collaborate with each other politically to ensure that that their policies and the way that they were setting up regulations were somewhat standardized to their own benefit, right? So it wasn't like it was like, oh, we have to defend ourselves against these marauding, invading oil companies. It was more about how can we set ourselves up such that we all benefit from the industries that are coming here and the companies that are coming here. So I think there are multiple facets to this. You know, things like you know, naval vessels capturing seismic boats across a maritime border that's disputed is clearly not a good way to collaborate cross-border. But you know, Venezuela's kind of a special case out on its own here. Erik, I wanted to hear what you thought about Guyana and what the future holds there.
The border issues. Well, fortunately, one of the borders seems to be very well resolved. The Suriname border, which for 8 years was actually in dispute, and the two countries came together and figured out a way to get that all ironed out, which is very useful. The other side, the western side, is more problematic, and yeah, it's a difficult place to operate. Most Venezuelans are raised from an early age believing that, in their school lessons, believing that a good chunk of Guyana actually belongs to Venezuela. So it's politically a very powerful idea for a politician to stand up and kind of wave that flag and make that argument. And unfortunately, they all seem to do that. Even the new kid that's you know, making his way here has already kind of played those cards. So this is a real challenge because you have politics colliding with reason and to nobody's benefit. So.
And Tim, how about your experience with rigs and how easy it was to move cross-border?
We look, and I'm not trying to overly wave a flag here. We had great success moving our INSCO rig, getting through customs. If we look at all of our bottlenecks through this project, which has been an extensive project, we're now in our 4th penetration. You know, the customs aspect to it is probably the easiest aspect to it. And a little bit of planning, you know, a little bit of dry running and things like that, you know, good communications. But it's been easier. And again, that's our point. If we can do that with some major boats and, you know, if we can lean on our friends and some of the major service providers to help us get started. And then as you do that, again, rigs being a different matter, particularly deep water rigs. Obviously, shallow water, there's a different source of rigs. But we can start to then add more, you know, local content as we go, as we get comfortable on how things are moving and how we can be nimble in the logistics and all that. And I think we've done that with time. So, yeah, we've had very good luck. I mean, we're pretty happy with how it's gone.
Scott, I'll move to the next question, but if you have a burning question in your head and you really want to ask, go for it. I'm going to give you an opportunity while I flip to the next question.
Let's do it.
Anybody? Any burning question?
What's one over there?
Just think through that. All right, we'll take one. Okay. Go for it. Okay, can you give him live? Should be a good one.
on Argentina's Vaca Muerta potential and all the work that has been done in recent years. This morning there was a session with FEMA and they said the break-even costs in Vaca Muerta have reached $40 per barrel. They compare that with Brazil pre-salt, which is according to IHS 45. So as somebody said, you have limitations in your teams and your capital. So I think being able to take and achieve those low production costs, you must have a huge upfront expense to get those economies of scale. So how are your thoughts on Argentina and shale and the opportunity costs with other deepwater projects?
Well, I can start off. I mean, we're in Argentina. We drilled a couple of the exploration wells for the oil trend a few years ago when I first got into the job. The geology is great. The rocks continue to cooperate. The kind of performance that you see out of the wells is very competitive with other places that you can go do unconventionals. Costs are coming down significantly. Obviously, they don't have the kind of curve that we have in the Permian or some of these other places, but there's reason to believe that you can get down, to the lower cost kinds of environment that you need to really make a commercial project. So the companies, we've invested a few $100 million to kind of take it to the next stage, as have a number of the companies that are down there. It's competitive in the portfolios, to your point, it competes. There's still plenty of above ground issues in Argentina. As most of you would know, that they subsidize the price of gas there. So, they have like $7.50 guaranteed price on gas. So there's a whole conversation around how long that's going to stay. So I think it's a difficult place for an investor. And this goes to above ground history. You're trying to commit to a country, it's going to be a long-term relationship. You're going to be in there for 30 years. You're going to put people and, capital in there. And you're looking at the behavior of the country over the past 20 or 30 years, and you're a little nervous, because they've had resource nationalization, they've had some kind of unpleasant things. So I would guess that's where many of the investors are, kind of at right now. Geology looks good. We're kind of wanting to do more, and the better parts of it are competitive globally. But we got to be really firm on what the relationship is, above ground, and what those terms are going to be going forward.
Sounds good. I've already started the next question here, and the reason it's so close are strong NOCs with technical know-how in the region beneficial for Americas. And I'm saying people think so. I know Chevron, you're in Brazil, and a strong Petrobras seems very attractive to you when they want to use their technology instead of yours.
I think, absolutely. So, anytime we're thinking about who are kind of the right co-venture partners, you're looking for, technical know-how, regional know-how, as well as funding ability. And, in the region, in Mexico, we're partnered with Pemex. In Brazil, we're partnered with Petrobras. In Argentina, in the Vaca Muerta that just came up, we're partnered with YPF. And in Colombia, we're partnered with Ecopetrol, and we're partnered with Ecopetrol outside of Colombia. And I think all of these companies in their home country arguably bring, deeper knowledge of the geology than any of us have. They've worked that geology. It's their home country geology, as well as the supply chain in countries. So that's tremendously valuable. And then taking that knowledge even outside of countries, they bring the deep knowledge again from the particular kinds of assets and the particular kind of operating systems that they call home. So I think we're very blessed in this part of the world with very strong national oil companies to partner with.
So how do you feel, Tim, about a strong Pemex? You enjoying that?
Yeah, look, I mean, those guys paved the way. I think it would be disrespectful for us not to, give them the appropriate amount of credibility they deserve for paving the way in their hydrocarbon system, the amount of seismic they shot, the wells they drilled, the knowledge they have. And, we need to tap into that, and we need to be respectful of that. I mean, can we map things and can we produce things? Yeah, we think we're pretty good at that. But what they did in the last 80 years and how they developed the basin, there's an opportunity for us. But we need, and we're excited to have them as a partner, and we're learning a lot from them. So there's no doubt the answer is yes there.
I think, Sandeep, this is just at a high level, building off of this, it's really about the diversity of experience and thought that when you're coming together, this rich local knowledge of what's the history, what's bitten you in the past, that deep knowledge that can be married with people who maybe come in with some fresh insights, fresh ideas. Those make for powerful collaborations, and everyone can benefit when you can bring all of the different experiences together to address the challenges of exploring and hopefully moving into development.
Yeah, I totally agree. I think, a lot of the NOCs have long histories of technical excellence. So the geologists and engineers working with them, it's very easy for them to look at their peers and, realize that that's a valuable relationship. One of the big changes that's happened in the last decade or so is that the NOCs, through force of economics, have changed the way they're thinking about the business, and I think have a much more aligned view of how to run the businesses and what's important from a strategy point of view, and that's helped this relationship and really improved our relationship. So we don't have this sort of direct misalignment with NOCs that maybe existed 20 years ago.
What I'm going to do is ask you the last few questions, get your results, and then we'll go to a closing because we are pretty much close to the time. So I'd like to have your input on next question. Do you see opportunities for new manufacturing centers in Americas? And the reason we brought this up because we've been boasting about supply chains being enough here, supply chain, but do you see, as an audience, that we need more of this? Of course, Colombia would like to develop another center there, but perspective. It's just collecting, don't worry.
Yeah. Again, I think, Sandy, as far as Colombia is concerned, I think we are sort of in between of, manufacturing or having big manufacturing centers in the country instead of importing the equipment. And the proof to that is that for offshore, there is a scheme that is already in place, which is a free trade zone that has been set up, to help companies, operators, to bring equipment without having to nationalize it or even bring parts of equipment, assembling the equipment together, for the operation. So again, I think, there is, I'm sure there will be good instances or cases where having new manufacturing centers in Colombia would be a good idea, but I'm not sure that there would be the case for all,
Right. All right. We're going to rush to a few more questions here, and then we'll table it off. I think Tim probably has influenced you, but the pace of development is faster in Americas than the rest of the globe.
Well, you're giving me way too much credit on this. I can answer these things. Look, I mean, we do the best we can. If we were trying to do what we're doing in Mexico, in a place like Argentina that doesn't have the proximity to the U.S. Gulf of Mexico, could we move at this pace? I mean, I would be being dishonest if I were to say yes to that. So, we're benefiting to a culture we created in the U.S. Gulf of Mexico and trying to transfer that where we can to these other basins and bring that sense of urgency that, not to suggest it doesn't exist there, but maybe exist in a different way. And you work with what you have. I do think the general collaboration cross borders and the general globalization benefits everybody, when we do what we try to do as a smaller company. And we're not alone in that. Cosmos is another example. There are others. So, I think it's faster because of its proximity to the U.S. and same time zone and things like that. But not to suggest you can't move quickly in other areas.
Chris, you have to say something on this, I guess.
Yeah, thank you. I guess we can see by data that cycle times for our projects are improving. Back when we had $100 oil, the industry did not do a very good job delivering projects on time, and the price probably didn't help that. And there's a number of reasons why, right? It's standardization, simplification, better project management, reduced scope, phasing of tiebacks, all those kinds of things. It's taken on a little less, but trying to do it quicker. I think the other interesting trend is that we're seeing now that some of the majors are starting to partner up with some of the more nimble companies, right? Who recognize that, through some examples that Tim shared this morning, that there's some companies out there that can do things a lot leaner, a lot faster, and a lot quicker. So I see that as a willingness of the broader industry to find ways to improve these cycle times at lower cost and generate these revenue streams quicker. So I see that momentum continuing.
While you're talking, this was trending. They think even the cost, our audience agree there's a lower cost structure in this part of the world than others in Americas, which is credit to the way we have the pace here and we have been able to make decisions. Liz, any comment on that? I know you also work on the similar element, trying to develop new technologies here.
Yeah, I mean, I think the cost structure in any part of the world is dependent on a number of things, and one of it certainly is just how robust and how mature the local supply chain is, and then you couple that with, how much, local content is going to be required in different places, and I think if you get sort of the blend of, local content and local capability and aspiration and bringing more capability into places, and you couple that with a, very robust supply chain that you can call upon, and then, rules and regulations that let you get sort of permits most efficiently, then you can get to a place where you have a chance to have a lower cost structure. I think it's going to vary a little bit by country, and it's going to vary a little bit by project type.
Sure.
Maybe another way to sort of think about that is the Americas have been able to take advantage of a lower cost structure because we've, with declining prices, a lot of cost of rigs, of seismic boats, all this has dropped dramatically, and Americas has been somewhat unique, and there's been opportunity, there's been discoveries, there's Brazil, Guyana, there's places, Gulf of Mexico, where people have had success, and so you're able to take advantage of that in a big way. That's also driven a reduction in cycle time, and I think maybe Petrobras deserves a little credit for this because the whole movement towards FPSOs, that's really a game changer that we're still seeing how that's affecting things. I mean, I look at even in our experience in Guyana, and we're going to be 4 or 5 years discovery to first oil. That was not the paradigm in the company before then, and that's a boat being built in Asia, coming over. So it's an exciting time. I think there's a lot of really fundamental changes going on in the Deepwater.
I'll give you one last question, audience, and then we will have the closing remarks. What is your prediction of activity level in Deepwater Americas next year at OTC 2020? You're still divided. Booming, okay. Guys, chime in. You can influence them. These guys are your investors, remember?
Yeah.
It will be really booming, guys. Take our word. All we need is investment. But really, what do you think about it? Because there's a caveat to this question. Because next is 2020, and I think we'll be more clear vision 2020 will come in, but we just want to get
Stole
your
my
view.
line.
You're still 50-50, huh? Still not convinced it'll be booming.
Yeah, I think we have to remember that some of us, work for, run public companies, and a lot of value was eroded out of this industry from a public equity option standpoint, and it's created a set of demands on us on where our capital programs go and the pace in which we spend our capital and the expectations of what that capital returns, and that causes you maybe to slow down just a little bit, make sure you're picking the right stuff, and it's hard to kind of couple that with booming, if you will. So I think it could get better. I think there's a price environment that if it stabilizes, encourages you to spend, but I think the era of just outspend your budget and go crazy, I think that time has been tempered, and we're all living in that, those of us, again, on the public side. So I think that just maybe keeps booming out of my selection. If you have one in between, I might pick it.
It's not that bad. It looks bad, but I have a look back for you. Last year, we were in this panel. Can I get my slide back?
Yeah, note I was on it, and I voted for the more.
Oh, I did? I did, okay. Look back. This was last year's slide.
Yeah.
Think about it. Compared to that, I think we are booming. And with that, I'd like you to give your closing remark. Chris, why don't you start, and then we'll end it here.
Yeah, thank you. Very good conversation. Thanks for those of you that did stick around for the 2.5 hour panel. It's appreciated. Thanks to you for organizing this as well. If you kind of go back to the last question on what do we think will be in a year's time from now, maybe I can rally my closing remarks around that. I mean, ultimately, at the end of the day, are we happy with what today is? Same as today, right? I would argue that there's significant amount of activity and momentum that we're seeing all across the regions, right? I mean, it's gotten a lot busier. So how do we continue to capitalize upon those successes, implement what we learned from quicker cycle times and maintaining lower break-evens to maximize these volumes and to ultimately generate the most value for the corporation. But I'm truly encouraged about what I see. Obviously, it's a very dynamic M&A environment right now, right? There's a lot of interesting things going on in the industry, which is going to be telltale to watch how that plays out and what opportunities that creates for certain players in the market. But as one of the panelists here and one of the players here, we are certainly very encouraged to try to grow our business in North America, which we've deemed as a core growth area, specifically in the U.S., and we're moving forward to try to grow this business.
Liz, come on.
So first, I'd say congratulations to OTC for 50 years. I think it's a testament to how important the offshore is that we've had this conference for 50 years. Say Deepwater is very important to Chevron. It's a very important part of our portfolio. It's a part of our portfolio that's growing. The Americas are a fabulous place to explore. There's some great rocks, which we've talked about. And from an access perspective, two very big and prolific geographies that were not accessible for a period of time that have become accessible. And I think that's why you see sort of the pace picking up, as well as some of the things you talked about being, sort of in this cost cycle. So I'm excited to be here. Thank you very much for having us and having this panel, and I look forward to the rest of the conference.
Thank you.
Yeah, echoing OTC, I mean, the biggest reason we try to do this at Talos every year is just begin to celebrate what this is about, and I think the role we play in offshore development, in developing the resource, and our impact on the global economy. And then for a company our size, again, I think it's just important that we participate and let generally the audience and industry know the role we play, and that we take that very seriously, and we're just happy to be here, and obviously honored to be on the panel.
Carlos?
Thanks. Same thing. We are happy and honored to be here. Thanks for the invitation. For Ecopetrol, offshore is definitely a way to succeed in the future. For us, being in the offshore and building capabilities and making investments is something that is a given. So we're very happy to see that things have happened in offshore operations, Deepwater, the break-evens, the technology advances. We think that now, I mean, we are in front of a very good alternative to unconventionals. So again, the good rock is here, I mean, from start. In a conventional, the good rock is after you frack the rock. So we think that Deepwater, I mean, is a place to be in the Americas.
Guys, after hearing, you can change your answers. We're trying to tell you it's booming. Cindy, isn't it booming? Tell me.
Well, it's been a real pleasure to participate in the panel, and thank you for so much thought and preparation, all the hard work that's gone into this, and your hard work sitting with us for all this time. I'm kind of in the same boat. I think it all starts with the rocks. So very similar to what Carlos was saying, we've got great rocks on the Americas margins all around. We've got great opportunities, a lot of fantastic capability in terms of technology and people and experience, and a kind of, in many places, a sort of can-do attitude, you know, like you see the opportunities, what could be. So I think, you know, we will be somewhere in that zone between booming and same as today as we continue to see the balance of the more conventional offshore plays and the advantages they bring to a company's portfolio, you know, being sort of balanced with the onshore and unconventional side. So look forward to seeing what next year brings, and with that great 2020 vision, we'll look the next 50 years as well.
Erik?
Yeah, I'd agree. I'm very bullish. I think there's a lot more oil and gas to be found in the region. I think working with governments to make sure that we get the fiscals and the access and the regulation right to allow all these great explorers out there to compete, it's going to be in everybody's best interest. So I think it's going to be an exciting few years ahead.
Thank you. So Julie, they're expecting the chart to go straight up. What do you think Mackenzie would say on that for the future?
Well, I would just say, you know, sitting in a research company and with a focus on the Americas, I don't think I've ever seen a more exciting and really upbeat time to look at exploration, right? And see that moving forward to great developments. Looking forward to seeing new production deep in the deep water in some new countries that haven't had any deep water production in the past. All through the life cycle of the industry, I think there's a lot of exciting things happening. I keep hearing our own numbers quoted back at me in terms of the break-evens, getting more competitive with shale and how those have come down. So yes, absolutely. In the big companies, you know, it's part of Deepwater is part of a portfolio approach. But I think also for smaller companies that are just focused on the deep water, it's really an impetus for them as well to get more investment, to really get that license to operate and go out there and from all stakeholders to go out and run their business. So, you know, I just want to say it's been a real honor for me to work with the companies and the individuals on the stage. I've really enjoyed it, and yeah, here's to the next 50 years of OTCs.
So look at the way the glass is half full. That's what she's saying. When you look at our data, and I'll still say, if you look back last year, think about it. We really think it's booming this year. Just this is the last year result I wanted to share. Also wanted to thank some people who were behind the curtains. You're seeing us, but I want to acknowledge people who were behind writing this OTC script. So I would really encourage you to read that 29-page paper. I mean, it's a good read. And some of the people who contributed to it, Andrew, they are here, Kristen, Tabitha, Isaac, Alana, and Mauro. So all these people were co-authors in a way at the back. And of course, the panelists. I want to thank everybody, and a round of applause for everyone. Thank you for coming. Enjoy the OTC. One minute. Oh, don't go away. So this is